Joining us now is Ntsika Ntsokolo from Sasfin Wealth with his take on today's market performance. Ntsika, thank you so much for your time this evening. How are you making sense of some of the jobs numbers we've gotten out over the past day or so? Yesterday we got that blowout jobs report, the non-farm payrolls, but digging deeper, those revisions for 2025 pointing to softness, and then you get the jobless claims, right, falling but dipping less than expected.
Good evening, darling, and thank you so much for having me on. And to your point, we've had a bit of a roller coaster ride of some of these job numbers, some of them looking up and some of them looking down. And certainly on the back of the greenback really finding its feet again. I think momentum and US exceptionalism seems to be back on the table, but somewhat cautiously optimistically, I think Kevin Walsh, the new Fed chair, to come in May does a lot with that. And we're expecting him really to bolster the entire environment and really back the greenback, I think, in the long run.
And keeping that picture in mind, we've heard some economists somewhat dialing back their expectations when it comes to those interest rate cuts, right? There was an expectation that would probably only see some easing coming through once the current Fed Chair Jerome Powell leave. But it seems like they've pushed back those expectations even further with the prints that we've received. Have you changed your expectations, or are you waiting for the inflation print to, I guess, get a clearer picture, fuller picture of what everything looks like?
I think the inflation print is, definitely the gold standard. Once we get a better understanding of whether or not we're tracking towards our kind of 3% target in the US, or 2% target in the US rather, and whether or not we're kind of getting momentum then, whether or not we'll be able to stick. I think the appointment of Kevin Walsh is a big kind of swing from what we expected from Trump. I think we expected somewhat of a sycophant who was going to cut rates indiscriminately of what the data said. And so to finally find someone we think will have a backbone and be a market supporter, I think has really done a lot. One, to the downside of the risk for the gold, and on the upside risk towards the dollar. So certainly looking towards those inflation numbers, but to your point, certainly more optimistic than we were when we started the year.
All right, let's move over to some company news. Markets cheering AB InBev's latest earnings, beating estimates when it comes to volumes and revenue. However, it's still dealing with, dampening beer demand, particularly in its key markets. Is this a structural shift, right? Because we've also seen that play out in Heineken's number.
No, certainly. I think the shift generationally from who the consumers are of alcohol has certainly changed. And the dynamic around how, the younger generation actually de-stress and, with everything and other than being made legal now. So we're seeing a huge shift away from beer. I think total beer volumes across the region or across the world fell about 2.5%. And so it's very impressive that, AB InBev was still able to come out with, I think, €1.15 divvy and earnings per share up 18%. I think it does exemplify pricing power that the group has. And certainly with the medium-term outlook around 4 to 8% in terms of EBITDA shows that cautious optimism. But I think the demographic shift, as you pointed out, is very much something to look at.
Interesting to see that in some emerging markets like SA, the picture is rosier. So clearly, I don't know, you and I, we like to have a drink or two over the weekend. Let's move over to Aspen, right? I don't know if you had a chance to look at that update that was released late yesterday. What caught my attention, and I was surprised that the share price was trending firmly. It was high, but I think the last time I checked, it was up 7%. But the group is flagging double-digit earnings decline. What's going on there? Why are we seeing that disconnect?
Look, I think the big story around Aspen is the sale of that Asian Pacific market, the one, the ex-China. I mean, the total realized price there is absolutely massive in rands. I think it's 26 billion rand that the group will receive for that operation. And I think the all-in advising costs for the restructuring of this period were only in at around 700 million. So I think the market is somewhat happy and, pleasantly surprised that they kept the costs down as much as they did. I think we're all expecting double-digit downside, but certainly that reflected for us upside in the investment case.
So downbeat, but not as bad as expected. Let's move over to your stock pick then. Where are you seeing value at the moment?
We buy cars. We buy cars. One, I think, because of the current where we see ourselves in an inflationary environment and just how much new vehicles cost. It's quite extraordinary what it costs to get any kind of entry-level vehicle these days. And the fact that the second-hand market continues to churn over. I think that the recent sale from the founders, bringing so much liquidity or selling so much of their liquidity in the stock to the market reflects an opportunity for retail investors to probably get in.
All right, let's leave it there. Ntsika, thank you so much for your time. As always, appreciate your insights. That was Ntsika Ntsokolo from Sasfin Wealth.